Hey everyone, it's your host Marcus Norman of Gentleman Style Podcast Show. And I have today this incredible woman who has done something unique. She has left a government job after 14 years, the IRS, and she is here. She's the CEO, founder of her company, and she remembers becoming enthralled with just the excitement of wanting to get into the taxes and the industry. And now she has started and founded and launching and scaling her own company, her own brand, which is helping millions and millions of business entrepreneurs across the globe take back their taxes in the United States and do it right, legally save hundreds of thousands of dollars on their taxes. And she's here. We were able to steal her away on the Gentleman Style Podcast Show today to help give valuable insight. As you know, taxes is every business's nightmare, but it doesn't have to be. And she's here to help spill back some of that tea and peel back some of those layers to help us do better as business owners going into the foreseeable future. Now, of course, this isn't tax advice. I have to protect my guests. You'll have to set up your own consultation and make an appointment with her and her team to help you make the difference in your unique industry. But here she is today, and we're gonna try. We're going to try. So help me welcome to the stage the incredible Miss Carita Thompson.
Hello. Thank you so much for having me today. I really appreciate being here, and I love what you guys stand for. And I'm excited to talk to you about all the things taxes.
We are excited to talk to you. And again, I appreciate you making time and sharing space with us today to help. I don't think we're going to solve the enigma that is taxes today, but we can try. We can absolutely
We
try.
can definitely try for sure.
And so starting off, I want to start off with a softball question. It shocked me when I read your resume. Your resume is extensive. When I read your resume, it was mind-boggling because I know for me, my experience growing up, my parents were like, get a job, get the house, get the wife, get the picket fence, and get the good job. Get the one with the 401k plan and the benefits and all that stuff. And you got the creme de la creme. You got into the IRS, which is really high level at the top, one of the biggest positions that you could ever achieve. That's a milestone.
Right.
Why did you leave? You quit the IRS after 14 years. You walked away.
Right.
Why? How? Tell us your mindset, please.
So I want to make sure I correct this. So I actually was there 7.5 years. The 14 years is actually when I started studying tax law. So I started studying tax law at 14 years old. So I bet that's where these numbers are coming from. But started studying tax law at 14 years old, was at the IRS 7.5 years. And so why did I leave? I actually dreamed of working at the IRS since I was 18 years old. As soon as I understood that they were so different than any other accounting firm. And so when I got the job, I thought you would roll me out of there in a body bag because I thought I would die at my desk because I loved it. I love tax law. But when I went to the IRS, see, when I started studying tax law, remember that I got a booklet from the IRS teaching you how to do a tax return. So I was under the impression that I could make an impact on the world to teach business owners how to pay less tax. And so when I go there and I start running people's lives every day, I started trying to find a way to make sure that they didn't never have to see me again, number one, and number two, that they would look at this bill that I was giving them as a consultation fee, and I would give them enough strategy where they would never have to pay taxes again. So when I would go in and audit somebody, I would look at the laws and say, okay, what is the IRS trying to do here, and how can they work within the laws that are set by the IRS to help them pay less tax instead of getting a large tax bill. And what I found was most of the reasons they got these tax bills was documentation. All right. They didn't have the documentation. And secondly, they didn't do any strategy. They're just sitting there literally just giving things to their accountant's throwing them on the return, and they're doing nothing strategically. And so when I would go into an audit, I would do strategy with the client there, because I needed something to make myself feel better, because I knew the bill would be coming that I would have to give them, and I needed to make myself feel like that was okay. I came from a very poor family of business owners that did not have a lot of money. And so I knew that was the biggest fear as, you know, a business owner. And so what essentially happened was I started a ministry at night helping business owners pay less tax. So that would help me, you know, for a few years. But one day I came across a guy, and he was actually selling tax strategy advice to people, but he had been guided wrong. Okay. And I was going to have to give him a bill for $100,000. And he was a blue collar worker. He had gotten mixed up with a uh, multi level marketing company that sold tax advice. Stay away from any of those.
Mm.
And I was going to essentially ruin his like life, and he couldn't have outcome this. And it was just the final straw. I was like, I can't continue to ruin people's lives every day when there are people out here teaching the wrong thing, and I've got to do something. I'd started a ministry several years before, but I had to do something more than that, because you know, you don't need a lot in life, right? It's not about the money, it's about the impact that you're going to have on people. And so that's why I left. And I knew like I had to get out in front of this problem, because I would have people, you know, crying every day that I was ruining their lives. And I understand, because no one tells you what you're supposed to be doing. Like,
Right.
how many times has the IRS been like, hey, you know, we want to help you make sure that you're doing all this correctly? No, no. And then you have an accountant. And that's what frustrated me the most is I would be auditing people, and their accountants would just be like, oh, just disallow it. Oh, just disallow it. And I was like, this is insanity. I mean, the accountants don't want to deal with the IRS, or they're scared of them. So they just essentially don't even help the client in audit. So anyways, I left
Wait,
because I
what does
couldn't
that
anymore.
mean? What does that mean, disallow it? Can you
Yeah.
explain that?
So like you would have something on your return, the IRS would say, "Hey, can I see proof of this?" And instead of the accountant going and helping you gather the proof, recreating the documents, because that is allowed within the IRS, or helping you in any way, they would essentially just tell the IRS, "Oh, you can disallow that," meaning take it off the return. In everything you would ask about, they would say, "Oh, just take it off the return. Oh, just take it off the return." And that's infuriating, because it means,
This is someone's CPA telling
yeah,
the IRS, no, just remove it. Don't even
yes,
count it now.
yeah, yeah, like that's what they're doing. And so yeah, like now, I mean, obviously I defend all of my clients personally, because I'm like, I'm never going to have somebody that's not a beast to the IRS, because your accountant is not going to protect you. They literally are terrified of the IRS because they're scared the IRS would come back on them, so they'll just blame you. Is that not insane?
That's terrible, right? That's terrible.
Terrible.
The whole point of partnering with you, having you, is to you, and you said it earlier, strategy, right? I need you to help me plan for the upcoming season. And we're not going to hit every facet, right? Because tax law changes, right?
Yeah.
But you should be helping me maximize and making suggestions throughout the course of the year to maximize the benefit. But I need you to debunk something real quick. Can you
Okay.
debunk, is the tax law actually in favor of the individual? Because I think that's a skew. I think people have the impression that the tax law is not to our advantage, but it sounds like it is. It sounds like the tax law, if used correctly and with the right professional like yourself, it can be. But I think people have that misconception. Is the tax law in favor of the individual business owner or businesses or us as Americans?
Yeah, so let me explain that. It depends on who you are, right? And that's what all this comes down to. So the government, the IRS doesn't make any tax laws, okay? It's the politicians that make the tax laws. And the politicians are paid by donors. And so the donors say, hey, I want you to do this. And then it gets put into the tax law. And that is how the tax laws are made. So when people think it's the IRS, absolutely not. And so what you have to do, and what I do is I go read actually what's happening in Congress, and then I'll pull it back down. I'll be like, okay, this is what the billionaires are doing. This is what they're trying to push. This is what they want. And then I bring it back down to small business owners. So the way this works is the government wants you to do certain things. They want you to provide housing for other people. They want you to provide jobs for other people, and they want you to provide money for the economy. All right. So that's businesses do that. And so everything that they do revolves around those three things. And so then there's different people in Washington that have certain agendas they want to pull in. So maybe somebody is pushing really hard. There's a PAC that's going together and they want solar. That's where we get a ton of solar credits from, right? Well, our current administration is way against solar. They want oil and gas. So right now, the pendulum swings, and now, oil and gas, manufacturing, all these things have credits right now. But it's constant. That's why we have so much change in tax law. And one of the things you said was it changes so fast, like you should be helping me plan ahead. Well, what we do, we're the only firm in the country that's actually ever done this. And this is the first year we've tried it. But what these are called are strategies that are done by a third party that's not your accountant. So there's about 100 things that the government will allow you to do that they give you a credit or a deduction or something for. And your accountant doesn't know how to do them, right? So a good example of this is like a cost segregation. Okay, so a cost segregation, that's very standard. Lots of people know about it, but it's not something your accountant should be doing, right? Your accountant is going to get a provider that's all they do is cost segregations. Well, there's about 100 items like that. Now, you only hear about, one or two, but employee retention credit, that was another one. But those come out every year. And so what we do is we take all of those incentives and we put them in something called our treasure hunt. In every business that you own, we do a Great American Tax Treasure Hunt on. And we're just trying to find those things that an accountant would miss, that they don't know anything about, that there's special credits for in the tax code that have come out in the past few years, and make sure that you get those. So we look at those for 3 years because those are things you can amend your return for. It's stuff you already qualified for, but nobody knew that you could get that because accountants are not experts in everything, right? They're experts in preparing a tax return or doing your books or whatever their expertise is. But preparing a tax return and getting the, couple of thousand deductions that are available to business owners is much different than the 100 tax strategies that are credits and deductions that require a subject matter expert. And so that's what we focus on. So you can still use us with a tax preparer. So you don't have to leave your tax preparer, right? If you love them, we can do your strategy on top of that. They'll take care of those regular deductions, and then we come in with the strategy.
I love that. I love that. I love that. So this isn't necessarily a way to fire you guys as CPA, y'all. You can still, this is on top. This can be an addition to, right? And you can blend the two together. Tax strategy is something I love the fact that you bring in the tax strategy piece, because too many business owners, like you said, I remember I remember my co-founder, she had told me we had to fire this guy. The old accountant, she would bring up, she would ask questions like, hey, is this write off? Can we write this off? Can we write this off? Can we write this travel expense, this business expense? Hey, the company's going here. We're doing this for our team. Can we write out? He'll be like, no, can't write that off. No. But then the CPA that they hired, he would go on a business trip and he would come back and say, I wrote off my whole trip. And it was like, that's not, so he's willing to take the risk on himself, but he won't take the risk on your business or even though he knows the law and he knows what you can write off and what's ethical, but you won't do that for my business. So we fired that guy because I need someone to not just help me bookkeep. That's what I'm hearing. There's a lot of, and FYI people, there's a lot of bookkeepers out there that advertise that they can help you prepare your taxes. But that's all a bookkeeper does. They just keep the stuff neat and clean and organized, and then they give it to you to sign off at the end of the year. So be wary of those people.
So two things I want to hit there before you go on. The guy that acted like that, so he acts like he's employed by the IRS, right? And so that is a very big problem with the older accountants. They act like they're employed by the IRS. But number two, do not ask, is this a deduction? You're going to ask, how can I make this a deduction? Because that's an open-ended question. And he's going to have to think about it, right? Like, do this, and this. So, and also, if you're wondering, go ask ChatGPT, because if I ever get stumped when I'm like, is this a tax deduction? And I'm like, no, but how can I make it one? Because I want to always come back with something to my clients of like, hey, yes, you can do it in these situations, but I want to tell you something that is, controversial, but I think it will drive home the point. Drugs are a tax deduction to a drug dealer. So if that's the case, then everything is deductible in the right situation. So don't let anyone ever just say no. Ask, how can I make this a deduction? And then you will have an answer. And maybe you don't want to do that, but that way you will have an answer.
I love that. That reframes my brain into saying, okay, what are the stipulations or the criteria that can make this a deduction? So this vehicle, if I say, is this a deduction? Your CPA will say, what do you use it for? And you'll say, well, I use it to go here. And I'm like, no, how can I make this an deduction? And that prompts everyone involved to say, okay, your vehicle needs to be doing these things in order for it to be a taxable deduction. I love how that reframes the wiring in my brain.
It does for me too. Like people always say, is this a tax deduction? And sometimes I'll just say no. And then I'm like, I try to always reframe it, but sometimes I don't know. I'll have to message them back and I'll have to be like, hey, okay, let's think this through of how to make it one, because I teach this and I even forget. But when you ask someone a closed-ended question, the answer is no, because you can't think of something that right off the top of your head. Like people always ask me, is a swimming pool a tax deduction? I'm like, no. But how can I make a swimming pool a tax deduction? Okay, well, one, swimming pools are usually a tax deduction if you're using it for a business. Okay, so like if you're a swimming pool director, if you give swimming lessons, if you're
A lifeguard,
medical reason, yeah, if you're a lifeguard, like if you have certain things that you're doing with that pool, or like if you have a pool company and you're using this for demos, like there are several ways a pool can be a tax deduction. We have HRAs. You can, if your doctor says you need a pool, then your HRA can pay for that, and it can be a deduction. So there are ways, but the problem is if all you say is my pool a tax deduction, and I know you don't do any of those things, I'm going to say no. But if I just elaborated a little, you might be like, oh, I could do this, or I could do that, or case in point, like if you rent your pool out on that app that's like rent a pool, that could be a tax deduction for that app. So it's just, there's a lot of ways, but if you just ask one-sided question or a closed-ended question, like you're not going to get those things out of people.
Absolutely. Change your mind, people. Change the way you think about stuff. I love it. You said something, and it's kind of this. You were talking to me when I heard it. Years ago, I used to be a part of a multi-level marketing. I am no longer with that multi-level marketing company. And one of the things that friends, they've seemed to die down, and I'm glad, because anyone that has ever approached me about a multi-level marketing company, I have always told them, you'd be better off in business for yourself, right? Go into business for yourself. Usually, more commonly, they're not worth it. They're not worth it. All the money's been made. Everyone's heard of it, or everyone has been touched by a multi-level marketing business. Why did you say earlier the uniqueness of it? You spoke to the uniqueness of it, or stay away from it to that degree. What are your thoughts on multi-level marketing?
I actually love multi-level marketing companies, but this one specifically actually was teaching tax law. Okay, so the multi-level marketing company was, you would buy in for tax strategy. Like you would buy in and they would teach you how to pay zero taxes. And the company actually would teach you, you could write off your entire house. You could write off every meal you ate. You could write off every mile you drove because you were always doing business for the multi-level marketing company. That's not true. And so this guy had gotten indoctrinated in this, and he was writing off like his entire house, every mile he drove, every meal he ate. And he was selling this to other people, right? And so the whole multi-level marketing company was doing selling tax strategy that was fraudulent. And I tried to go fraud on the multi-level marketing company, but they would never everything in their documents only would point to a little bit of it. So it wouldn't like I didn't have anything recorded where they told him to do this. Okay. And so I tried to go above, I tried to help the man out, but like there wasn't any proof that was concrete enough for me to actually turn it over to criminal investigation. So it was heartbreaking. But yeah, like there are multi-level marketing companies that do very well. I actually have a lot of clients who are in multi-level marketing, but stay away from those who try to give you tax advice. That's all I can say. Because they're not accountants, right? Like there's a lot of people that think, TurboTax is the ultimate adult video game. Okay. And that's fine. But if you get approached by a multi-level marketing company that's selling tax advice, just say no. Okay. It's just not worth it. You're going to get what you pay for. And so that's what this guy was doing. And it broke my heart because he was out there selling this to people and spreading this. And I knew like, he's getting a $100,000 tax bill. Can you imagine what his friends were going to get? He was going to run all their lives. And so I stepped away because what I was going to have to do is open the cases on everybody he had sold to. And that's devastating for someone. And so I just walked away. I was like, I can't do that to this man. He doesn't deserve that. I mean, you might, some people might think differently, but he didn't know any better. Right. And so anyways, it was just very hard. But stay away from those who sell tax strategy advice that's not, and that doesn't just go for that. It goes for everyone. If your strategist is asking to look at your last returns and that's how they're going to get your strategy, that is not how you do tax strategy. And that's what I hear a lot of, like, oh, let me look at your last returns and I'll give you a plan. Well, all that's going to do is tell what your accountant should have been doing, but they didn't do. Okay. Strategy comes from a place of looking at what the client did that you can't see on a tax return. Where did you do business? What county did you do business in? What kind of employees did you hire? What industry is that in? And, those kinds of things that you can't tell from a tax return. The biggest red flag on a return is actually the code that's put in to tell what industry you're in is usually the wrong code. And so a lot of people think their return, it's certain things on a return that, are red flags. Okay, the biggest thing that's a red flag on the return is actually having the wrong NAICS code, not because it's a red flag that it's that code, but that they're trying to compare you to everybody in that has that same code. So if you're a real estate agent and you've got, 100,000 miles for the year, but they put you on here to a dance teacher that should have no mileage, like
that'll trigger it.
Going to look very bad. Right. Mm-hmm. And so that's how it's done. It's not done by like line item. It's done by what your code is compared to other people in your code. And if your tax preparer puts 99999, that's a red flag. They're going to be like, okay, I can't even compare this return. So then they're going to look at it for questionable items, large questionable items. So making sure that code is correct. And then when you're doing strategy, making sure that they're asking you questions that are that you've never heard of before. Why, like your thoughts should be like, oh my gosh, you are asking me questions that no one's ever asked me. And that is what our strategy does. Like it asks you questions that nobody's ever asked you because nobody's looking at you for all these different strategies. And it's sad. It's honestly sad. We saw it with ERC. We saw, that's one thing. Employee retention credit was one thing that came out. It was only available for a couple of years, but it was one thing that came out. And I'm like, there's things like this every year, but there's not enough money in it for these big marketers to go and throw ads everywhere. So it was a little bit of a wake up call for people when they would go to their accountant would be like, no, I can't do that. But man, if that was the case for every strategy, I think there would be a big change in the American business owner to be like, hey, why am I not getting this stuff? Why are the billionaires getting it, but I'm not? Why is my president, who's a billionaire, saying it's smart to pay no taxes, but I'm over here paying $100,000 in taxes?
Right. Absolutely. Absolutely. This is huge. I love this. I want to stay in this same lane right here because this is good. You've shared some very great points about some tax strategies that can trigger a potential look at and make questions arise up in the IRS mind in this ecosystem. What's another underutilized business deduction that could save entrepreneurs thousands? If you had another trick in your hat, what would you see? What have you commonly seen most entrepreneurs or most CPAs miss when looking at their clients and finding tax deductions for them?
Okay, so deductions and strategies are two different things.
Absolutely.
So strategies are always missed. I mean, you're never going to see those on a return. Deductions, though, those are things that should be on every person's returns, right? And so what are the things that are deductions that should be there? Well, think about it. How many times do you turn something into business use that when you're starting a business, or just the next year, or maybe you have like a gift that somebody's given you're using in your business? Nobody ever puts those on the return, ever. I've never seen them put it on the return. So let me go a little bit further into that. Number one, Christmas is coming up. You might get a gift from your husband, like a new camera, and you're using that in your business. Don't forget to take that and put it on your return. Now, when your husband buys it, you have the receipt. So you're like, oh yeah, I wouldn't forget that. But what if your mother-in-law buys it? You can use their value that they paid for that, the lower at fair market value, or the actual value paid. You can put that on your tax return on your business and make that a tax deduction. When you start your business, all the things that you gather from around your house to start using in your business 100%. I mean, look, a fireplace or like electric fireplace. I used to have that in my room, so I never deducted it. But as soon as I turned it into a business use, I deducted it. I bought it in prior year, but I put it on the current year return. A desk, maybe you had a desk sitting around. Maybe you've moved a couch into your office. Maybe you've moved paintings into your office, and that's now your office space. Those are now deductible. Okay. So don't forget those. Even if you didn't buy it in the current year, as soon as you move that into your working area, and that's 100% business use, deduct that in the current year, and it's lower of fair market value or the cost paid. All right. I never see that on returns. Obviously everybody should be doing the very basic strategies. So basic strategies, meaning like not anything advanced, would be like renting your home to yourself, right? It's just moving money. It's a tax deduction on your business, tax-free income to you. That's going to give you, probably $25,000 in additional deductions, and it didn't cost you anything. So as you're moving into year end, go back and make sure that you got your 14 days in. That's called the Augusta rule. Make sure you're paying your kiddos that work in the business, like, put them in some Facebook ads, do something like that. Those are very basic strategies that anybody can start with. We have a training every week where we say, okay, this is what you would need to do the strategy. Again, very basic things. Then a little bit more complicated, make sure you have a health reimbursement account. All right. So you can deduct those, oh man, my back's hurting. I need to go to the massage therapist. Okay. Like, we want to make sure we can find a way to deduct those things, because I swear if I get it once a week, if I don't get this question once a week, I would be surprised. But like, how can I deduct massages? How can I deduct, these things that are usually not a deduction? Get your doctor to say, yeah, you need a massage, get you an HRA, which is a health reimbursement account, and reimburse that, put it on your business account. So just those little things of like knowing, okay, let's kick this up one notch. Just hopefully that's answered some of those. I could go on all day. I would be here all day telling you all the things you could do, but those are a few things that are definitely you should be watching out for if you're just starting. And then when you get into the advanced strategy, now that's stuff people never have, whether it be R&D credit, the WOTC credit, the disability credit, all those things, people just don't even know they even qualify. So I don't talk about those on here because they need a specialist. And but those are kind of the higher level things that we're looking at. We're just trying to make sure that you're taking everything that you can possibly do. And that's why our stuff, we can go back 3 years because it's stuff you're already doing. It's not stuff that you're like going to try to do. It's stuff you're doing already. So
absolutely. I appreciate that. And you're right. Those things require specialists. Can you speak to the more common one? Here's the common one. I know you probably see this a million times over is people want to write off their vehicle, right?
yeah.
They want to write off their car as a company vehicle. What is the proper way? I've had this car for years. I purchased it. I now this year, 2025, I started in business. And I now use my personal vehicle for business. How do I transition that car to the business and say now this becomes a business asset and now I can write off the mileage? What is the proper way to do that so people don't go to jail?
Yeah, so you're just doing that through an accountable plan. You're just going to put your mileage in. Yeah, keep up with it on MileIQ on my phone. It tracks every single mile I drive. And then I go through and determine, was this business or was this personal? Now, you want to make sure that you're maximizing these miles. And I say mileage because you just said an older car, right? Something you've had for a while. It's usually not worth it to put that in and take it as like the actual cost of the car. Mileage is going to be way more beneficial. So mileage, you're going to try to make everything a business trip. Okay. So your son has a football game over here. Well, do you have to go to the store to pick up something for a business or the bank or the post office and then go to the ball game? And then on your way back, do I have to go again to get something for business and then come back home? Right. So when I say, how can I deduct that? I'm always looking for how can I maximize my expenses so I can take the most possible. Now, obviously that was when I was starting in business. Now I'm not that nitpicky. Once you get to the millions, you're just like, you're just trying to look at the big things. But when you're starting in business, I tried to get every single penny out of the government I could. And so I tried to make everything a business trip. Another thing is I try to always have a home office. So if I do have another location that I'm going into, like case in point, I have a office that is our business office. Well, if I'm just driving from home to the business office, that's commuting. So I need to make another stop in between there every day. So that's an actual business trip. So I always would go to the post office first and then to my office. So it was always a business expense. Then also so we have a real estate company. So what I did was I just moved a real estate office beside my house. And so the real estate office is now my first stop. We have a meeting there and then I go on to the office. So I can deduct that entire mileage route. You don't have to do anything with the title of your car or anything like that. You really are just keeping mileage and making sure that you get that into the proper place. Now, if you're a Schedule C, which is a sole proprietorship, you can just put that on the return. But if you are an S corporation, you do have to have an accountable plan, which we do for our clients. And you will just need to keep up with the miles and then you'll just be reimbursed for that mileage.
I love this. This is good. This is Miss Carlotta Thompson on the Gentleman Style Podcast, spilling the tea here in front of it. She is fabulous. This is huge. I want to talk about structuring, right?
Okay.
Many people get this wrong. Maybe many people are self-employed and they don't even know it. Entity structuring, LLC, S Corp, C Corp. To the uninitiated, what does that mean? What's the difference? What's self-employed? Am I self-employed? Am I operating as an LLC? Why should someone even consider something besides putting the money in their personal bank account? Help us out.
All right. Okay, so how do you even know you have a business? Well, if you get a 1099, if you are a business owner. All right. If you get a 1099, you're a business owner. I don't care if you're doing Turo. I don't care if you're doing
DoorDash,
DoorDash, I don't
Uber
care
Eats.
what you're doing, Uber Eats, that's all 1099. So you're now a business owner. Yay, okay. And then you're like, what do I do with this? Oh my gosh, this just means I pay more taxes. No, it doesn't. It actually means now you've fallen into the class of people that can pay the least tax legally possible, because business owners structured correctly and doing the right strategies can actually pay less tax than anybody else. That's why we have a billionaire as a president paying no taxes. Actually, he paid $600, and I said, if I was doing his return, I would have got him into earned income credit and got him a refund, because I don't care if you like the man or not. Any billionaire that says it's a good thing not to pay taxes is running the country he's got something on me. Okay. So, I'm just saying, let's be real, please. I don't care if you like him or not. I like that thought process. So
right.
That's my thoughts the whole time. So anyways, structuring is actually the biggest strategy that you can do. And I'm going to give you one example. I was sitting in Hawaii last year, and this guy that was our next door neighbor, him and my husband were talking, and he was like, they were talking about me being a tax strategist, and he came out and he was like, well, I'm selling my company, or I just sold my company, and I need to know, how to alleviate all these taxes. And I was like, well, you're not going to have any taxes because you structured correctly, right? And he said, what do you mean? I was like, well, you were a C Corp, you did a 1202, you sold correctly, like you had an accountant help you through this. And he was like, no, my accountant told me I needed to be an S corporation. I was like, okay, well, you just paid taxes on $3 million because you had bad advice. So if he would have just checked a different box, that man would have had no taxes on that $3 million. Now, isn't that nuts that no one's out here talking about this? So let me go a little bit deeper. When you're starting out in a business, you want to make sure that you are an LLC. And the reason why is because it gives you the most flexibility when it comes to the IRS. All right. And that's because the IRS doesn't recognize an LLC for tax purposes. So you tell the IRS how you want to be taxed. So you have the most options for how you want to be taxed. You can say, I want to be a C Corp, I want to be an S Corp, I want to be taxed as an LLC. As a sole proprietorship, you get to choose. And that is why you should always become an LLC. It also gives you a little bit of, legal protection. But if you're doing, if you're out there doing Turo, I'm sure you don't care about the legal protection as much. I mean, I would, because I have a lot to lose. But let's say if you're out there doing DoorDash, okay? Most people doing DoorDash are like, I don't need all that. It costs extra money to have an LLC, blah, 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 blah. But the thing is, if you're an LLC and you're starting to make more money, you can choose how to be taxed. And so up until you're making about $40,000 after expenses, you want to choose to be taxed as a sole proprietorship. And once you get over 40,000, then you want to choose to be taxed as an S corporation. Once you're planning to sell the business, you want to choose to be taxed as a C corporation. Structuring is so important. It's the most important thing that you do in business. Also, if it is real estate, you always want it to be an LLC, but you never mix real property with a business. Ever, 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 never, ever. Okay. What I mean by that is if you have an office building, you keep that office building in a separate company than your actual business that's running. And the reason why is because the tax issues between that, you will always pay more tax if you have real estate in with a business. Okay. When you go to exit, it's not fun. So always keep those two very separate, and have those on two sides of your thing. That's why they're on two separate returns, right? They're on a Schedule E or a Schedule C because they should never be combined.
So my real estate needs to have its own LLC, and the property management that manages my property should be another LLC as well.
Absolutely.
So keep them separate. So every property needs to be its own entity, incorporated. All of the money is separate from me, or as far as distance myself.
So the way I have mine is my property management separate. My property management company does not own any real estate. And I use my property management company for a lot of different things. And so it does not have any real estate in it. All right. Because it's managing the properties, it's getting paid to manage them. So you never put active income, which is the property management, with passive, which is the real estate. All right. So the real estate, I don't necessarily put every one of those properties in a different LLC. I do it based on my risk. And when I was an IRS agent, the amount of risk I was willing to take was about 50,000. And why do I do it based on risk? Because I know if somebody gets hurt there, I'm only gonna lose about 50,000 max, after they pay off my loan on the property. That's all I'm gonna lose, because the loan comes first, right? And after the loan, if there's not much left, great, because I don't lose anything. So that was my threshold. Now it's a lot more than that. So because I have 42 doors of real estate. I don't want to have 42 LLCs out here. So I try to group them in my risk based on risk level, and that your risk is based on how much the property is worth minus how much you own the property. So if you owe 100,000, but the property is worth 200, that's $100,000 of risk there. Okay, so that's a lot of risk for most people, including myself, because I'm cheap. So how much risk are you okay with? And then create separate entities based on that. That's why in real estate, you should actually always get all of your money out and use other people's money to finance the real estate, because it's just smart business. Real estate there's a higher chance of people getting hurt and suing you and something like that. So, I mean, honestly, I worry more about my real estate than I do my business. So I just take a lot. I just separate those out. I try to always keep a loan on them, even though I don't like personal debt, but that's a business debt. And so as long as I can keep the debt maxed out on those, I don't have as much risk. So that's what I do personally. It's a personal feeling. I don't like debt on my personal residence, but on something I'm renting to someone else, please give me all the debt. So if they sue me, they can only take what equity I have in that property and any other properties that are in that LLC.
When should I classify myself as a real estate professional with my real estate? Because that is something that I think that's what you mentioned earlier, that classification. And so I've heard professionals say, "Hey, I'm classified as a real estate professional," and that gives them some pros and cons. Can you speak to the real estate investor who didn't know that was even a classification type, and why does it matter? When should I bring it in, or when should I even consider it?
So real estate pro is something I don't like for people to do unless they're really a real estate professional, because it is very highly audited. So let me talk about that. A real estate professional means that you're in the actual business of doing real estate, and you have more than 750 hours a year on it, and it's more than half of your time. So if you do something else, if you're in any other business, it's really hard to get your real estate pro, because you have to be 750 hours and you have to do that more than you do anything else, right? And so I'm a real estate pro. I don't even consider myself that, but I do have the hours because my husband is full-time real estate. So only one of us need to qualify. But a lot of people will try to do real estate pro, and they have right at 750 hours, and then the IRS will come in and they'll disallow, half those hours because it's not things they consider to be pertinent. And then now you've got a mess on your hands. Real estate pro is definitely one of the highest audited things on a return. Okay. It just is. It's something that's very abused within the IRS. So that's what I want to preface this as. If you're in construction, if you're in, real estate, if you're in things that are around that realm, you're okay. But if you are over here and you're a stay-at-home mom or stay-at-home dad, or you're retired or something like that, and you're just trying to get that minimum 750 hours, I'm going to tell you, you need to go ahead and get about 900 to 1,000 hours, because probably all the hours you're counting are not going to be allowed. All right. So that's number one. Number two, what's the point? Well, the point is, if you are a real estate pro and you do long-term rental, you can take the long-term rental losses on your return. Otherwise, it's limited to $25,000 if you're low income, which is, under $100,000 or so. The limit changes every year, but it's not much. Or it is not allowed at all if you're above that. All right. So you can't take any losses from that long-term rental. So what do I do instead? Well, I like my clients to do short-term rental. And usually the first year they do the short-term rental, we'll do the cost segregation that year so we can get the full amount, the maximum depreciation in the first year. We make sure we rent it out the first year. We do all the work the first year. And then we can turn it over to a management company the second year. We can turn it over to be in a long-term rental the second year. But it is much easier to meet the facts and circumstances under a short-term rental than it is to try to, do all this stuff to get it into a long-term, get it into a real estate pro status. Short-term rental, you're allowed all the deductions. As long as you're the one managing it, you're doing everything, and you have more hours than everybody else, and you do substantially all the work. So that's the route I would go instead of real estate pro, and it actually equals the same thing.
Absolutely. Absolutely. T. Why do so many people? I heard this, and you have insight, you have wisdom that I need right now. That I need for you to share. So many people are terrified. Like I told you, that prior CPA we fired because he was so scared to death of doing our taxes in a certain way that could trigger an audit.
Mm-hmm.
And I think a lot of people have that belief. They're scared of you, Miss Thompson. When they saw you pulling up, right? You making that phone. Well, the IRS is never gonna they're going to send you letters. They're not going to call you.
Actually, that last guy, we had to cold call for a while. And that last guy, I cold called. Yeah. Yeah. Now they say they don't do that anymore, but there was a couple of years there where we cold called.
Okay. So there you have it. There you have that piece. What I want to ask, some people say, oh, the IRS only goes after millionaires because your small business is not worth it to them to go after tax wise. Right. And I think that leads into the fear when they see the IRS taking someone to court for millions of dollars for tax evasion, when they take Steve Harvey to court for tax evasion, this celebrity, that celebrity, and someone kind of bottled it and said, they only go after the big dollars. They're not going to mess with your small business. Is that true?
No. You should be like, when you go into business for yourself, you should just know that you're going to be audited one day. Unless we unless we stay a Republican, under a Republican regime, I say regime like we're, it's like a military or something. And sometimes it feels like it, but unless we stay under that, let me explain to you how this works. And guys, I don't like to be political, but you have to be political when you talk about taxes because it's literally the government. So in politics, when there's Democrats in office, they flood the IRS. Okay. So then they audit tons of people. They audit low income, they audit business owners, they just audit. Okay. When Republicans come in, they cut funding to the IRS. So when I was an IRS agent, I was like, yes, let's get a Democrat. I'm going to get a raise. We're going to get more work. We're going to hire more people. And when Republicans came in, it was like, oh my gosh, we're not going to get any raises. We're not going to get anything.
Oh my God.
It's the truth. So now on this side, I'm like, when we're under Republicans, I'm like, great, there's not going to be any audits. Everybody's going to get a break. So it's just how it works because the funding, right? It just depends on who's in office. So right now, Trump has laid off so much of the IRS. The number of audits have gone down tremendously, okay? Because they ain't even got no workers over there. But as soon as it's, because every 4 years or 8 years we change, as soon as the next, regime comes in, we'll be right back to 4 million zillion audits. And so who do you think they're going to audit? Well, there's not that many rich people in America, and there's not that many auditors that can audit them. So mostly the people the IRS hires are actually TCOs, which audit the poor people. Then the next level is, IRS agents that are 11s. Those do the small businesses. Then 12s, they can do a little bit bigger businesses, and then 13s, they can do up to like 50 million in gross receipts. And that doesn't mean you have a big business, because your net may only be $1 million, but it goes off gross receipts. Now, once you get through that, that's where all the agents are. So as a small business, you actually have a lot higher chance of getting audited than a large a millionaire, a billionaire, or whatever, because there's so many more agents out there for those returns. Now, the percentages show, 1% of, the wealthy or whatever get audited, or 2% or something like that. But there's not that many of them, right? So the percentage can be a lot different. But you definitely have a very much higher risk of being audited as a small business owner, I think, than as a large business owner, in comparison to all the businesses out there. Maybe not as far as like, I know they do audit bigger businesses a little bit more, but not that much more in comparison. So if you're going to be a business owner, just get ready for it. And why are you scared of an audit? I mean, you just need a Carlotta in your life, because I'm not scared of no audit.
When I see the media and when I see big millionaires, right, big time celebrities, a couple years ago it was the guy from Jersey Shore, the situation, right? He was tax audited. He made millions and millions of dollars, and then he got an audit, and then they found out that he hadn't been paying taxes for years. So why are millionaires, why are people with money not paying taxes? It doesn't add up. If I have millions, I imagine I should pay my fair share, right? But they don't. Commonly, routinely, they miss it, they forget about it. Why is that happening? Is that a CPA problem? Is that our education problem? Is that my fault? Because I should have known, I should have been paying taxes the whole time. Why was the IRS, why were people not paying taxes? And they had the money. The money was there.
Well, IRS actually lets you go about 5 to 6 years without paying, and then they get you all at one time. And that is the strategy they use, because they only want to come after you once every 6 years. They don't, if you're not a non-filer, they want those years to add up. But I'm also going to tell you another thing, and I don't like to tell people this, because I think that it gives, it might make some of your listeners go, well, I'm not going to file. It's actually better to not file at all, than file a wrong return. So if you file a wrong return, you actually can go to jail. If you don't file at all, it's very, very, very hard to go to jail. They can't get you, because they can't prove fraud on you. You didn't do nothing. You just didn't file a return. So they can, try to get you for, to pay the bill, but to send you to jail, they have to show that you actually were trying to get out of not paying taxes. So they have to have some other proof of like you were, doing this deliberately. Otherwise, they can't prove you did anything fraudulently. So they
have no proof. You've given them no document.
Yeah, they'll go after you for the money, but they won't put you in jail. So these people that are going to jail, that are, that are business owners, that are multimillionaires or whatever, they usually file a return and it's wrong. Okay, so like look at and I know they got pardoned, but the Chrisleys, right? They filed a return. It was just not the right return. And so, usually that's the case. It's not that it's that they just file something that's incorrect. But usually the people that don't file, they actually can go 6 years normally without getting, before the IRS really comes down on them. And then they just take your money. So it's, some people just wait and they're like, every 6 years, I guess the IRS will come after me. That's not smart, because then they're going to put all these penalties and interest on you, and it's crazy. But I do know people that, they just don't file. And that's better than filing something wrong.
Absolutely. What is your take, or what's the emotional toll of being audited? Right? Because again, they used to see your car pull up, right? And they're like, oh my God, Miss Thompson is coming. What's the emotional toll that you've seen businesses go through when being audited or finding out an audit is coming? And how do you now today help your clients go through that? Do you provide that service or no?
Yeah. And so what I do So first of all, what is the emotional toll, right? The emotional toll is, I mean, I've had people try to, threaten to kill me. I've had people,
Whoa.
threaten suicide. I've had people do everything. Okay. It is very emotional. I'm a person of faith, and usually people I audited would bring their faith in. So, like, I mean, I would literally, if they asked me to, I'd be like, do you want me to pray with you before we start this? Because I want to calm your fears, because there ain't nothing happening today. Like, you ain't going to jail. I'm out here just auditing you. Like, you're not doing anything wrong. You just didn't do this correctly. Right. And so I try to calm people down. Number one. Number two, you better have somebody that's doing, if you do get audited, you need to have a representative and do not speak to the IRS, period. You need to have a representative, and you need to make sure that they understand if you need to interview them. Are you scared of the IRS? Are you going to stand up for me? I mean, if you're not, I need to move on, because I need somebody that's a bulldog to the IRS, not that you're just going to be like, oh yeah. I can tell you every accountant around here, I never audited anybody that their accountant, I'd be like, you need to use that accountant, because they stood up to me. People don't stand up to the IRS. I say, but boy, I'm on fire whenever I'm going to the IRS. Like, you're not going to play me, because I'm going to appeals anyway. So you can do whatever you want to do. So yeah, like do we offer audit? We offer audit defense on everything we do. Okay. So if I'm doing your stuff, Carlotta is personally going to be defending you, I don't outsource that to another agency. I'm not paying, like when you go to H&R Block and they're like, oh, we'll give you, we'll sell you audit defense. Okay. That's a bunch of bull. That's not even worth the paper it's written on. It's a joke.
The H&R Block audit defense?
Yes, that's a joke. Oh my gosh, that's terrible. But most accountants are. They just have like a third party, that they I would say H&R Block is actually I shouldn't be talking about people's companies.
No, but, you're okay.
But I mean, actually the person that the H&R Block sent out was probably one of the best I ever had. But still, it's not like somebody who is, like all that audit defense that you can add on for $30 or $40. I would say it's not going to be
Steve who helped me file the taxes in the first place. It's going to be some other third party agency representative. It's not going to be the person that actually filed it.
Right.
Okay.
Right.
So why should someone choose your firm versus H&R Block or the big guy TurboTax? That's the selling point. That's the elevator pitch.
Yeah, you should not even choose me if that's even what you're looking at, because that's not, like, we're just in two totally different spheres, right? Right. What we're focused on is tax strategy. The people that need me are those making over $40,000 after expenses, and you need to feel like you're paying taxes, like you're actually, having to pay in. If you're getting refunds still and you're still paying a bunch of money, you're still getting a bunch of money, you're not ready for a tax strategist yet. But when you're ready for tax strategy, that's when you actually need me. And that's also probably when you need to switch it into a different tax service. Because I'm going to tell you, when you're working with higher level people, it's different. But most accountants, you doing it on TurboTax is usually, if you don't have a business, is just as good as you doing it with an accountant at that low level, because the accountants you're going to get aren't very good. So I would say until you have a business, number one, when you have a business, you need to quit doing stuff yourself. Probably. Maybe you could do a little Schedule C on TurboTax, but like when you start making some money, you need to start using somebody that actually knows how to do a return. So that's what I would say. But why choose us? Really, our goal is to save you the money, to help you pay zero tax, and to defend you if you need help in anything. Now, I make sure that my stuff is where it doesn't look like no red flag, because I know what creates a red flag, because I was a classifier at the IRS. I classified returns, which means I told the IRS what to review on the return. So I've got that up on somebody, but I think you just need to find somebody that's not scared of the IRS, that's a great person that you can connect with, and that has great processes to make sure that you're paying the least tax possible.
Absolutely. This has been epic. This has been an epic conversation. How can people connect with you? How can people find you? How can people learn more?
You can find us at taxstrategistofamerica.com. You can search me on all the socials, Carlotta Thompson Finance. And yeah, just connect with me. You'll also have a link in your show notes. Thank you so much for having me here today.
Absolutely. Thank you for being here. Thank you for making time. All right, y'all. We are out of time. We got to let this incredible woman go. She has many more lives to change and many more businesses to save. Like we end every show, take care of your friends, take care of your family, and always, always take care of business. This is Marcus, your favorite gentleman, and the incredible Carita Thompson signing off. Love you guys. Bye.